Hey, podcast listeners, welcome back to the Retire Young podcast. Don't forget to go to the website at retireyoungaudio.com and drop us a line.
Welcome to the big show. It's the Retire Young radio show. If you're a first-time listener, thanks for stopping by. I am your host, Joshua David, and we are happy to have you with us today. Once again, I have my great friend and my great pal on the show today, Mr. Al Connickson. Al, how the heck are you doing today?
I'm feeling really good. How about you, Josh?
Hey, it's a good day. It's always a great day to be doing the show. We have a lot of fun talking about financial literacy and how the financial markets work. We got a real big show, Al. But before we get into current market conditions, I just want to just cover some of the topics that we're going to talk about today. We're going to get into multiple asset classes. We're going to talk about stock, options, futures, Forex. We're going to get into retirement, Al, because a lot of people are either near retirement or they're planning to retire or they are retired.
Very important.
And just want to make better decisions in those accounts. But first up, we had another great week in these financial markets. Just recap what's happened in the past week or so and some of the different things that you're seeing potentially long term.
What hasn't happened? I can't take credit for this. I actually saw it on Facebook, but somebody said 2020 is like crossing the street, looking both directions, and then getting hit by an airplane.
There's two different ways to look at that, though. This could be a huge opportunity for a lot of people.
Well, no, there's no question about it. We always say as long as the market is open, there's great opportunities. But now with the movements we're seeing, the volatility, we're seeing some great opportunities here. And the bottom line is never before has a $22 trillion economy come to a screeching halt and then restarted.
Yeah.
So, we've got no history to base projections on, but still a lot of people out there are giving their advice and their projections, but for them, it's really pretty much based on guesswork, and that's one of the things that you want to try to take out of trading and investing is the guesswork. But what is known is that we don't know the extent of the economic damage, and we won't know probably until July or August.
Quarter two, second quarter earnings and stuff like that.
Exactly. Yeah. But what we do know is that the market seems to be pricing in a return to normalcy and almost a near perfect solution to this COVID-19 issue. So those are the things that we're going to be looking for. And the market has been pretty accurate in predicting things throughout time. And right now, the market has had kind of a V-shaped recovery. And it really is almost predicting a V-shaped recovery in the economy, which a lot of economists said wouldn't happen. That right now, it kind of looks like that's a possibility. So it's really important now to understand how the market functions and to, again, learn how to take the guesswork out of it, learn how to just concentrate on the facts that really are repeatable and have an impact on market prices.
Yeah, you talk about you have to focus on the facts because let's talk a little bit about fundamental information and just what the public is seeing and reacting to. That's a key right there, is reaction to different news events.
Well, and think about it. People react based on what? They react based on their emotions, what their emotions tell them to do. And that's what gets people into trouble. That's what gets traders and investors into trouble. So as much as possible, the emotion needs to be controlled. And the best way to do that, and this is something that we have concentrated on for years, is to have a rules-based strategy or strategies that you follow that's more of a step-by-step process that takes the thinking and the gut reactions out of trading. It really doesn't. Your success or a person's success in the markets isn't dependent upon their level of intelligence. It's based on just understanding what impacts price, why do prices change, and why do they change sometimes within the same day or multiple times during a week. It's not that the fundamentals have changed every time that happens, and that's what most people have been taught to concentrate on. Look at the fundamentals, slave over these numbers and before you make any decisions. Well, the problem when you have a market that moves like this is that by the time you do that, the move has already taken place. And again, the fundamentals haven't changed. What has changed is buyers have come in, sellers have come in a large enough quantity to move the price of a market or an asset.
Yeah, and that really just comes down to one thing, and that's supply and demand. And that's how the financial markets work. If there's more buyers than sellers, price is going to go up. If there's more sellers than buyers, price is going to go down. So just explain a little bit how supply and demand really works in the financial market, because most people think of it as, goods and services.
Sure. Well, I think if you learned anything about finances in school, it was to understand the impact of supply and demand, because that's what really moves the price of anything in any market at any time. Real estate, for example, that's one that a lot of people understand. You know that if there is, say, one house for sale in a neighborhood and 20 people want to move into that neighborhood, the owner of the house can move the price up because there's great demand there. And if there's 20 houses for sale and only one person that wants to move in, there's an overabundance of supply. They have to all compete for the one buyer, so they lower the prices. It happens in every financial market. In the markets, when we talk about financial markets, we're talking about not just the stock market, but futures, Forex, options, and the supply and demand strategy, or not strategy, but the supply and demand relationship applies to all of those. And it's basically buyers and sellers. When we talk about demand, that's buyers. When we talk about supply, that's sellers. But it has to be in an area where there is enough buying. For example, like if you, Josh, if you wanted to buy stock in, you name it.
Apple, we'll say Apple, yeah.
Okay, you're not going to move the market. I'm pretty sure, I mean, I don't know how much money you have, but I'm pretty sure that you can't buy 1 million shares of Apple at one time.
Yep.
And neither can I. And neither can we together.
You're correct.
Goldman Sachs can, J.P. Morgan can, Warren Buffett can. And they may buy several 100,000 or millions of shares of something. And that's what is really important, is to, as much as possible, understand where that demand is going to be strongest, where the supply is going to be strongest, where the demand is weakest, and the supply the weakest. That really kind of gets down to, people will call that timing. You're never going to be able to time things exactly, but what you want to do as a trader or investor is to be able to be as close as possible.
And that's correct, because, I mean, we all know now that the institutions drive price. It's the big money, the million shares, the trillions of dollars, the Buffetts, the Goldman Sachs, the Deutsche Banks. They're the ones that move the markets. And we're seeing a lot of investors, Al, that want to understand how they trade and why they trade the way they do, but also why they put their, the public into certain positions, especially in like retirement accounts, 401ks, IRAs, but they're doing something totally different. Al, I do want to get into a little bit more about supply and demand and how the markets work and why the institutions are doing certain things in their accounts. But in the next segment here, I want to get into the futures market, the Forex market. If we have enough time, maybe even the options market, and why investors want to utilize those in their income accounts and retirement accounts, but just to understand more of what they are and how they function. So coming up, futures, Forex, and options.
Thanks for listening. Don't forget to check out the website at retireyoungaudio.com and leave us a comment.